Welcome, everyone. My guest today is Lead Analyst Logan Mohtashami to talk about the latest news on Trump and home builders and what we might see there, as well as existing home sales. First, I want to thank our sponsor, Trust and Will, for making this episode possible. Logan, welcome back to the podcast.
It is wonderful to be here. And just like 10 minutes before we got on, we saw the headline of Trump, possibly doing a, probe into the home builder industry.
Yeah, so interesting. There's not that much he can do about this, right? I mean, the government doesn't own those. Those are companies that are in the business to make money. What do you always say? What's your famous line?
They are not the March of Dimes. So
not the March of Dimes. So what could he do?
I don't know. He could probably take like a big stake in them. We're like big government buying, stakes into companies and doing tariffs, all this stuff. So, it's kind of the era of big government anyway. So who knows what could maybe possibly outcome out of it. But let's kind of go back to, why am I never a construction boom guy? Like I think this is good. It's never been my thing. I just think mature economies, as they get older and population growth slows down, we just don't build homes like a young country would. And every decade that goes by, existing inventory just dwarfs what the builders can put out there. So I'll go to the graves with this. I never thought the builders underbuilt in the last decade. The builders only build off of their own demand curve, and it was the weakest new home sales cycle. For those who might not have known me in the last decade, I talk about we're going to have the weakest housing recovery ever. Even though inventory was up, affordability was good, rates were low. Right? We were 3.25% to 5% for 10 years, but it took a while to get sales back going up again. So the builders, where they found themselves at a disadvantage in the last decade with all these existing inventory that's cheaper, and the builders were building bigger and bigger homes to, profit margins and all that. But COVID happened, and all of a sudden it all reversed, right? Active inventory was at all-time lows, and the builders really benefited from that initial surge in home buying. And then after that, not much, right? We've been slowly moving lower. We no longer crashing in sales or anything. We've just been basically going back and forth from 2018 levels. Whenever rates go lower, builders pick up, and rates go higher, sales tend to fall. But to get a construction boom, you have to basically change the entire business model of the builders. I don't know how you do that, but it's expensive. Land, you can't do anything about land prices, and the builders need demand, right? They need demand to feel comfortable. But now what we wrote about in December 23rd of 2024, the builders have a supply and demand equilibrium problem because the completed units of sales have finally caught up. After 14 years, it finally caught up to a level to where historically the builders really pulled back, and you see that in the permits and housing starts. So Trump sees this and thinks, okay, we're not building homes. We're to help affordability. You build, and we're not doing it because demand isn't quite there. So we go back to what we've always dealt with. This is very cyclical, and the builders kind of go no moss. And when that units of sale gets up there, and they just got to work through that inventory channel right now. And I don't know if this headline is just for show, because you're getting into the midterm soon, and you gotta seem like you're doing something. But I've never been a construction boom guy. We wrote that article June 7th, 2021, where we said, unless you get government deficit financing, you're not going to see it happen.
Well, also, you've always made the point that the builders are very efficient sellers. And their whole business model, they have to be super efficient. Or they're going to, they have to play the long game. They have to factor in all these things. So they're, as you said, it's not like there's huge demand out there and they're like, oh, we just want to undersupply it. If there was huge demand, they'd be building more.
When sales start to go up, the confidence state of the builders goes up, outlook for sales goes up, and what you see is housing permits go up. And traditionally in an expansion cycle, that's what you see. Housing permits technically are a leading indicator of the economy, but that didn't work. Permits are at recession levels here. Now there's all this, we have a historical backlog and we're working through all that stuff. But the builders aren't the March of Dimes for a reason, because if they acted like some of these quote unquote angels that just want to build homes and make it affordable, and you wouldn't make as much money, and your competitors would have an advantage, and it's one of these things that just works with every single cycle we dealt with. So we're not like saying anything abnormal here. We're just saying that this is how the builders have operated, and we always get in a situation where people say, we want affordable homes. I always go at, when I talk at these events, I go, has anybody actually seen an affordable home? Like, what does it look like? Like, I live in Orange County, California. The whole country is like, outside of maybe a few spots, is affordable to me, because, people who live here make a lot of money. So affordability is a lot, even in Texas, Texas seems very affordable to coastal California people. But in general, that's kind of, it's almost like, Chupacabra or Bigfoot or the Loch Ness Monster, affordable building of how, it's just, what does it look like? Do you build, for a certain income? There's all these things, but the probe isn't shocking to me, because the closer you get to midterms, the more you have to say that you're trying to do stuff. Like the credit card interest thing, I don't know, legally that can't really happen, or something like that. But this is the world we live in. This is the political economic theory side of stuff that I'm not a big fan of, but we just have to try to explain it to people as much as possible.
I think the other thing is that new construction doesn't live in a vacuum. So if you think about the people who would like to buy a home who are currently not in a home, so you're talking about first-time home buyers, and then you have to look at, they have to look at rent versus buy. Well, we've had a ton of multifamily building, a lot of apartment building, and that's brought rents down, correct? So then that's who the builders are up against, is or that's the calculus that a potential home buyer has to make.
Millions of people buy homes every single year. Rent deflation in big scale terms really isn't a thing. If you look at the history of rents, it's just, on a national basis, it's very rare because most people are working. So I just think there's a certain type of household that is going to be a home buyer at that certain age, and it doesn't really matter to them that they can rent something cheaper. Their financials are good enough that they want to own something. I always think that's the missing link of this whole discussion. There are owners, and then there are renters, and people want to own a house, start their family, get things going, right? They get a fixed debt payment, their wages rise every year, and that's the middle and upper middle class of the United States of America. So that's why I'm not a big fan of the rent versus own discussion a lot, because people go, well, why is anybody buying homes when rents are, but you also have to look, supply is a function of demand. So you have a lot of people with very, very low total housing costs versus to their incomes as they age and get older and older. So it's a multifaceted discussion, but we make it simple. The builders aren't the March of Dimes. So they got to work through that inventory. And then if they feel like rates are low enough, thankfully for them, they have used their profit margins as much as they can to keep demand somewhat going, or housing starts or permits would be worse, right? Don't make it any more complicated than it is, right? Rates go lower, demand picks up, builders feel better, they start building homes. That's just the way the world operates.
Okay, well, let's go from one part of the industry, the new home sales. Now let's look at existing home sales, which you've taught me. We never confuse these two parts of the housing industry.
Yes, where the builders sell homes as a commodity, the existing home sales market is a total different creature, right? The seller is a buyer, the buyer has, buyer buys that house, that seller then becomes a buyer, and then you have first-time home buyers, you have investors, it's a whole different creature out there. But here we are. Existing home sales are actually going to start coming out earlier in the month, not so much in the later part of the month now as the NAR's changed the date. But again, we ended the year at 9-month highs in sales. And then we had the 2 weeks of December, Christmas, first week of New Year's, all of that, even our pending sales data slow down. The NAR's pending sales slow down. And then we have the snow. And by the time this podcast comes out, the tracker has to have a hit from the snow, because you can't have like that big of a snowstorm and not have impact on weekly data. So the existing home sales report is going to get hit on probably two fronts. Once the snow aspect goes away, and then whatever rebound you get, take the rebound with a grain of salt, and then we just get back, because these are like delays in closings, and then sort of people that just can't go out and look at a home out there. But when weather comes back, we get a few months of back to where it is trend. We take it from there. But again, the year started out really good with our tracker data, purchase application data, rates near at 6%, weekly pending sales, total pending sales. The growth rate of inventory has slowed down enough to where maybe that slope of the curves has some negative year-over-year data out there. So it's a very positive start to the year, but you can't mess with Mother Nature, right?
Absolutely. And, we talked this morning when we were talking about this podcast, and we're like, one of the things that's just amazing is that with all of the crazy headlines, lots of things going on, rates are pretty stable. We're not seeing like this a lot
lot doing the John Hamm meme where I'm dancing at night, and which is funny because he actually brought that up in the NFL awards party, where the NFL football player says, "I don't really know who you are, but I know your meme." So, so he's getting up there age-wise. I think he's even older than the chart daddy. But look at this. 2 years ago, we couldn't say this, right? These headlines would just be pushing things up and down like crazy, but not much movement, right? Not much action on the mortgage rate side. And so when I talk about volatility compressing, right, and where we've got a lot of rate cuts in the system and the spreads are near, it's a whole different ballgame now than it was in 2022, 2023, 2024, and even in 2025, because now we got those rate cuts in and the spreads are normal. So we're dealing with a very, very calm, mortgage market to where, you're near 6%. So if anybody had a 7% plus mortgage rate or 8% mortgage rate, anyone could refinance that out, because there's enough time out there if they wanted that savings. So much different part of the cycle, and it makes sense, right? We've done a lot of rate cuts. The spreads are normal. Spreads were getting better before the year started. They got a little bit better after the MBS, and we just moved with a slow dance with the 10-year yield, mortgage rates, existing home sales, everything. But a very, very healthy market to do business in, rather than rates get down to 6.15 and all of a sudden 3 weeks later we're at 7%. Right? You can't operate with that kind of volatility. And then, when rates go up at that point, people just, you see, it's not like home sales crash anymore with 7% plus rates. They just don't really grow. And we're not there. We are not that far away from our economic summit, and really rates have not cracked above 6.25, even with the 10-year yield getting up to multi-month highs. And it's just, this is so much a healthier market than what we dealt with in the past. This is why I'm very happy. But like, this is where you want buyers and sellers and agents and loan officers, everybody getting into it now, because the backdrop is better.
So you talk about like we're getting into the midterm season, which lots of people don't follow the political calendar. Like, what do you mean midterms aren't until November? But from now till November, it's full court press to make, on every side to make sure that they're getting their message out. And I think the next time that we might see some real housing announcements, right, is the State of the Union, which is in February, towards the end of February. So, in between here and there, I think we're going to see a lot of things thrown up on the wall, see what sticks. And maybe they're just trial balloons, but I believe that we'll see more of the same.
Just promise everyone a Wonka bar and a gold ticket. And then you get something. Politics is politics. It's just, for somebody like me, I simply just don't. I like checked out of the whole thing back in 2016. So people go, why don't you care? I said, listen, y'all people are caring. There's so many people out there that care. Y'all You'll do it for me. But as an analyst, you have to, kind of weigh the option. So, of course, it doesn't look like we're doing a 50-year mortgage. Thank you. Positive. Portable mortgages, nobody even talks about that anymore. We've always had assumable mortgages. We'll see if the capital gains thing gets any traction. So the probe, we'll see kind of what happens, but things get different in a midterm year, right? Because you could say a lot of things, and but if nothing gets done in a very short time, usually the House flips. Now people are worried about the Senate, maybe. So whatever it is, it becomes more difficult for a sitting president after the midterms because,
right.
Typically, not all the time, but you get a change of power there. So, Sarah, it's early February. Man, this year is going to be long. It's going to be a Jack Bauer thing. But the one positive thing is mortgage rates are doing that John Hamm meme, slow dancing, and not much volatility. And it's been so long since we've had that experience.
And I think our industry is ready for it. It's like, please let us just have a spring home buying period that has less volatility and goes back to the basics of how people are buying and selling homes and doesn't have quite all of this other drama going on.
Oh, yeah, absolutely. Best thing. Inventory's up. Price growth is cooling down. Rates are lower. We have over 162 million people working still, right? So compared to what it used to be, man. Last year, the theme was the worst was over in housing. This year, we could get growth. And, the forecast for me, 6.25 and under, you could have 237,000 more home sales. That would be the first year of growth, and we'll see how it operates. But so far, so good. The snow thing will work itself out, and after the rebound, we'll take it as it is. But man, there is a lot of positive things, and the tracker data has really shown that are different. It's a much different time now than in the past.
Okay, so before we wrap up, I just want to say, you guys, listeners, if you are going to be at the Housing Economics Summit, come by, say hello to Logan and I. Tell us that you're listeners. We love to meet our fans. We love to meet you guys. You make all of this possible, and it's one of our funnest things.
Do we get more pictures with the cardboard version of myself?
I don't know if there's going to be a cardboard version of you. I never know until I get there, and sometimes you're always there. Usually, sometimes
there was that whole camera thing they had going, and then there was the cardboard of me was in the camera thing, and I'm like, oh, let's be the detective, not the troll, So we take all the Logan sayings and put them on. We have
so much fun at our events, and it's always great to meet people and see the industry. So we will see you guys there. Looking forward to it, and Logan, we will speak again soon.
Pleasure.